So let's now want to continue with topic 2.
Okay.
And before we continue with the topic 2, we want to do a small recap of what we did yesterday.
Okay.
And I will share some of my screen with the past paper so that we able to see. Don't know where is that past paper.
Alafu na masnacks kama tunakunywa kesho.
Just wait a minute.
That's okay. Attention.
Okay, so I've got it.
Okay.
So here is a past paper, and most of the part we covered yesterday is examined under the
Okay.
part.
Okay.
So as I find out this question, so remind me what we did say. What is accounting?
From the yesterday's discussion, we said that accounting is the process of identifying,
Yes.
recording,
Mm-hmm.
classifying, summarizing, and communicating financial data or information to the users.
To the intended user. And we said we have like 6 or 5 users. So they want was?
The 6 users of accounting information, we started with the owners.
Yes.
These are shareholders.
Mm-hmm.
That they wanted the information on their financial performance of the business,
okay,
or of their company.
Okay.
And then we customers.
Mm-hmm.
He said that also they wanted that information
Mm-hmm.
for performance of the company and its financial information altogether.
Yes. So now, so here is my past paper, May 2019. I hope you can see.
Yes, yes, I can.
And that because the CPA questions, the CPA examiner, they examine each topic, even if it is a 2 pages topic.
Okay.
They must examine that. So here in May 2019, there is a question 2 saying, explain the following terms. So the Roman 1, we have duality concept and prudent concept, totaling to 4 marks. So what is a duality concept?
Duality concept, it's a dual states means 2.
Yes, dual means 2.
So the dual concept, this is it is where the company and the owners,
Mm-hmm.
they come together for a common goal.
So is a good trial, but when it comes to accounting, a duality concept is basically that for any transaction, there must be two affected accounts. So, so basically, it is about the double entry rules. Like today you purchase a furniture, right?
Yes.
So there is an account which is a furniture account. We have increased that account, right? And then, so if we have increased that asset account, that is the furniture account. So what is the other account which is affected? Let's say we purchase this furniture by cash.
So we have the furniture account
And cash account. So that what the examiner wanted you to explain is about duality concept. It's a double entry rule. One account will affect. Did we give that a duality concept yesterday?
No, it wasn't here. It was not part of the concepts that we discussed yesterday. That's why I was trying to crack my head.
But it is there. So you see, we listed only 7, but there's several concepts of accounting.
We mentioned going concern,
Accruals,
prudent,
uh-huh.
entity, money measure, and materiality concept.
Materiality concept.
Yes.
So you did, so just now write duality.
Okay.
And you say duality refers to, duality is, duality means every transaction has two folded effect side.
Has two
fold effect. Wacha niandike, sijui nitaandika wapi one. Fold ile ya yes, fold.
Okay, fold. FOLD.
Yes.
Okay.
Fold effect.
Fold
effect in the account.
Okay.
In the account. In the account and it is the basis the basis of double entry bookkeeping. And it is the basis of double entry bookkeeping.
Double entry bookkeeping.
Bookkeeping, yes. So you must, once you debit the other side, you must credit the other side. Yeah. Yes. And what about the prudence concept?
We said that prudence concept is where the procedures. We said that this is where the alternative procedure.
Yes.
Alternative variations are possible. Only selected is the one that gives cautious presentation of the business financial position.
Yes. So we said as a business manager or a business manager or a director of the company, you should not make any decision without doing valuation.
Yes.
Yes. So you must do some computation on a project so that you undertake your project. And then the next question is that one was May 2019.
Okay.
And the next question, I'm trying to find out, I don't know who's sitting. The next question is November 2018.
Okay.
Did you cut the past paper? That one was for May 2019.
Oh, May 2019.
Yes. Did you cut the past paper?
Yeah, the one that you told me yesterday.
Oh, yes. So you can now open with me November 2018, question 1A.
November 29. This is 2018. I'm seeing the
Yes.
one.
So the next question is November 2018.
Yes.
So it's saying, in the context of the
November.
International Accounting Standard Board conceptual framework for financial reporting, explain 5 elements of financial statement. The 5 elements of financial statement. You say one is?
Let me read again. In the context of International Accounting Standards Board,
Yes.
conceptual framework for financial reporting, explain 5 elements of financial statement.
Yes.
We're talking of elements.
Elements of financial statement. And you see, it is 10 marks. That's why most of the people fail, because they ignore theory, and theory carry a lot of marks.
But are they the same as objectives?
Not the objective, the component of financial statement. We listed yesterday the main 5 financial statement.
We talked of limitation and account concepts.
There is another part. So we said there's a part we said.
Accounting concepts.
So before the accounting equation, and also there is, we say, main financial statement that prepared in accounting. Did we say that?
Yes, we did.
Yes.
That
So
was
yes.
the financial statement position.
Yes. Statement of cash flow.
Statement of cash flow, income statement.
And statement of changes in equity. So in fact, even the examiner, they want more 5, but there is no other one. So you can just indicate the general ledger for the first one, the fifth one. Yes.
Okay.
So those are the main account or the element of financial statement.
The ones that they're being prepared for.
Yeah, it is a must for every registered company or a limited liability company to have such account. Yes.
Statement of cash flows, income statement of change in equity, and general ledger.
Yes.
Okay, thanks.
Okay, and then we look at another question, November 2017.
November
2017, question 1A, B, and question 3.
Okay, November 2017.
November 2017. Have you find it? Okay. 2017, question 1A. We have question. So B, I will give you as an assignment. Question 1B.
Okay.
And also question 3A. Now, so the question 1 reads, distinguish between accounting policies and accounting standards.
Distinguish between.
So what is accounting policies?
Let me copy it first.
You want to copy the questions?
Yes, then I'll
Okay.
try to accept it.
Okay.
Yes, accounting policies and accounting standards.
Yes, can you try?
Accounting policies, I think these are guidelines that they govern the accounting sector.
That's now you do the opposite. That's now the accounting standard. Is the guidelines or the conceptual framework that guide the preparation of financial statement, right?
That is accounting standard.
That's accounting standard. And we say it, we have like ISA, we have like IFRS. Those are the examples of accounting standard.
Okay. The
And
guidelines.
yes, what about the accounting policies?
Policies are rules.
Are rules?
Rules that govern or they control the accounting.
The accounting, yeah, it is the rule or the policies followed by an organization when preparing the financial statement. So you can explain and say accounting standard,
Okay.
say these are principles
These are principles
that governs a current accounting practice,
govern current
accounting practice, accounting practice, and that is used as a reference. That is used as a reference to determine the appropriate treatment that is used as a reference to determine the appropriate treatment of complex transactions.
Determine the
Appropriate treatment of complex transactions. Yes. Then the accounting policy, you say
accounting
policies, you say
accounting policies.
you say these are
Yes.
specific policies.
These are specific policies.
These are specific policies and procedures.
Procedures.
Yeah.
Used by a company.
Used by a company.
To prepare its financial statement. To prepare its financial statement.
The standards are the principles that govern the current accounting practice that is used as reference to determine the appropriate treatment of complex transactions.
Yes.
While the accounting policies are the specific policies and procedures used by a company to prepare its financial statement.
Yes, and then you put a full stop, you say this include any methods. Any methods.
Any methods.
Comma, measurement system.
Any method, measurement
system.
Measurement system.
And procedures for presenting disclosures.
And procedures.
Yes, for presenting disclosures.
Yes, Disclosures.
Yes. Okay, so then now we can go back to topic 2. We see what topic 2 is all about. We do some illustration. So you find that topic 2 and topic 1, some of them are mostly theory questions, but now from topic 3 onwards is now where the most of the questions comes from. Okay, so I want to share the screen of note for topic 2. Okay, so topic 2 is about a recording transaction, right?
Yes.
And when we're recording this transaction, there's some document we use to record this transaction, like quotation, the purchase order, statement of account, remittance, receipt, petty cash vouchers, sales invoice, purchase invoice, credit note, and debit note, and bank statement, right?
Yes.
So the examiner might ask you differentiate between the purchase order and the statement of account, or a sales invoice and credit note. So
Okay.
when you say quotation, so quotation is used to let a potential customer know the cost of good or service before they decide to purchase them.
Purchase.
Yes. So whenever you want the customer want to purchase good, they will ask you, give me your quotation, so that they see your price.
Okay.
Then they compare with another supplier. And those it's normally in terms of labor cost or the material EDC, depending with what you are purchasing. And then the next one is the purchase order. We normally call it the local purchase order, the LPO, right?
Yes. Yes.
So it's a commercial document issued by buyer to seller, indicating the quantity and agreed price of product. So normally the purchase order is most of the people they use, or they call it LPO.
Yes, we have it. Yeah.
LPO. And then again we have the statement of account, and to say is a record of the transaction that have occurred on customer's account during a specific period of time. So under the statement account, that's why in financial accounting you will be required to prepare two statements account receivable and account payable.
Yeah.
So those are the examples of the statement of account. So you will be looking at specific types of transactions. You want to check the outstanding balance of the customer and outstanding balance of the supplier. So in normal practice, the people they prepare what is called aging account, the aging account. And then the next one is the remittance. We say remittance advice is the letter sent by a customer to a supplier to inform that the supplier that their invoice has been paid. So I think so. I will give you a summary note so you take. I think that one will help. This one is just a lot of theory.
Okay.
Then we have a sales invoice. So sales invoice, when you sell good on credit, you raise an invoice, right? So an invoice is just a document. It acknowledges that what there is a transaction you have made, but it is not a document that it demands the payment. It's just acknowledging it. So as per our note, it says that is a tool that a company uses to communicate to clients about the sum that are due in exchange for goods that have been sold. So it acknowledges the transaction, but it is not demanding the payment. The same case with the purchase invoice. So now what's a credit note?
A credit note is a document prepared to correct the is it undercharge or overcharge?
It is undercharge or overcharge. So it is not necessarily to be the overcharge or the undercharge. Again, it can be the damages, right?
Yes.
Let's say you sold good to the customer, and then the customer is not satisfied with the good. Now they can decide to what? To return back such goods.
It is coming from the supplier.
So it's affect from the customer. Credit note is for customer.
Okay.
And there are two. There is a credit note issued and credit note received. You getting me?
Yes, yes.
So the credit note issued is the one you send to the customer, and the one you're receiving from the supplier is the credit note you received.
Yes.
So you can see here is a saying issue to the debtor when the debtor returns some good back to the farm. So when you return good, you raise a credit note. The same case, when you return good to the supplier, you raise a debit note.
Kindly, on the credit note side,
Yes.
we've said the document that is written by the supplier or the customer.
No. So it is issued. It is written by the company.
Okay.
It is written by the company to give to customers, to their customers.
Okay.
Yes, but debit
That is
note is written by the supplier to the company.
okay.
Yes.
No,
So just understand in such a simple term. Credit note is written by the company to the customer, and then the other one is written by the supplier to the company. Yes.
To the company, yes.
The company. And finally, we have the bank statement, and bank statement show all the transactions which has taken place in the bank. Yes.
Maybe if I ask the difference between a bank statement and a statement of account.
The statement of account.
And bank statement, the difference between the two.
Oh, so the bank statement show all the transactions which took place at the bank, right?
Yes.
But statement of account, they only deal with the two specific accounts. That I told you, account of receivable and account payable. Yes, they only want to see the outstanding amount from our debtors and the money we owed to our suppliers. That is about the statement of account. Okay. Yes, so that's the only difference. So bank statement deal with the bank, but the other one deal with the suppliers and customers.
Suppliers and customers, suppliers and the company.
The suppliers are not they deal with the suppliers. They want to know the specific amount we owe to our suppliers, and again the specific amount our customers owe us.
Okay.
Yes.
Okay, fine. Yeah.
You can say a statement of account record of is a record of transaction that have occurred on customer's account during a specific period of time.
Right.
Yes, I say the lined items on the account will record information about purchases made by the customer, right?
Yes. So any payments rendered.
And the payment rendered by the customer and any miscellaneous adjustment that has been made to the current balance due on the account. So it's generally on account of the customers and suppliers. You don't deal with the bank. And then now, the next part is the book of original entry.
And
yes, so the book of original entry is is an accounting record. So you can write that one, definition of books of original entry.
Books of original entry.
You say is an accounting record. Have you right?
Yes, books of original entry
is an accounting record.
It is an accounting
record that is used to record the different types of transaction.
It is an accounting record that is
used to record the different types of transaction.
To record
different types of transaction.
Different types of transaction.
In chronological order or date order.
Order.
Or date order.
Dates.
Date, yes, date order.
Date ile ya tarehe.
Yeah.
Okay.
So kuna examples of these original entry to kuna sales journals.
Sales journal.
So sales journals in a record say they say or let me give you the summary.
Okay.
You write note on this instead of writing a lot of information.
What?
Yes. So make a summary of all those ones. So draw a table where there is a books of original entry, transaction recorded, and the source document. Are you seeing that table?
Yeah, it has got 3 columns.
Yes, it has 3 columns. So just draw that one so that the summary we sum up that books of original entry.
Okay.
So ukifika return inwards uniambie nikusomee, there's a hidden information under transaction recorded.
Okay. Yes, now you can go.
Okay, so you have write purchase day book.
Yeah, the same as sales day book, huh?
No, it's not the same. We have the sales day book.
Already number 2.
Yes, so number 1 is purchase is sales day book. Number 2 we have the purchase day book.
Purchase day book.
So under that one, so you write transaction recorded under sales day book. You say credit sales of inventory. Credit sales of inventory. Source document used, you say sales invoice.
Sales invoice.
And number 2, purchase day book.
So kindly, before we proceed, who prepares the sales day book or the sales invoice? The supplier or
no, not supplier, the company.
or the company?
Yes, because they want they are the ones selling to the customer, so they have to raise the sales day book. At the end of the day, you have to know the total amount you have sold or you have sold.
Yes.
Yes.
Okay. Oh, good, good.
Umeshaandika purchase day book?
Tuko number
two.
purchase. Yes, nimeandika.
So andika purchase day book under transaction recorded to say
Credit purchases.
Credit purchases of inventory.
Okay.
And under source document, you say purchase invoice.
Yeah.
And that now there is another one, number 3, cash book.
But there is cash book, huh?
Cash book. So under transaction, you say all cash and bank transactions.
All cash
and bank transaction.
All cash and bank transaction
Are recorded.
Are recorded.
And then to say, for example, say for example, cash sales, comma, a receipt from debtors, a receipt from debtors, receipt from debtors, and payment to creditors.
And payment
To creditors.
That's true.
And payment to creditors. So under source document, we have like bank deposit.
Bank deposit.
Bank deposit and withdrawal slip. Bank deposit and withdrawal slip. Comma, checks, deposit, and credit card receipts.
Maybe if I ask,
Yes.
Should we put payment voucher as a source document in this category?
For the
cash book.
No, that one goes to petty cash.
Okay.
Yes.
Okay, fine.
And then we have number 4, return inward journals.
Return your journal.
And inward journals. So we record good returns by customers. That is transaction.
Return inward journal.
Say good for transaction. Say good returns by customers.
Good return. Is it to or by?
By customers.
Oh, okay. Good return
by customers.
Okay.
Source document, we say credit note sent.
Credit note
Sent.
sent. Okay.
And we have number 5, the return outward channel. So tukirudishia supplier, we raise a book or a journal, that is a return outward. Say return outward channel.
Yes.
And the transaction is a good return to suppliers.
Return to suppliers.
And the source document, yes?
It is prepared by the company.
It is prepared by the company. Then the next one, the source those document is credit note received.
Okay.
Yeah. Then we have number 6, petty cash.
Okay. This is credit not received.
Yes, credit not received. Because we are receiving that. Then the next one is petty cash book.
Petty cash book, yeah.
Petty cash book. So when we say petty cash book, is a book which we record a transaction with a small value, or the petty expenses.
Yeah.
So you can now say under transaction, cash transaction of small value.
Cash transactions of small value.
Of small value. And under source document, you say petty cash vouchers.
Petty cash voucher.
Petty cash vouchers, comma, cash bill.
Cash bid.
Yes, cash bill. And now the last one is general channels.
General journal.
So under transaction recorded, you say all transactions which cannot be recorded in any other books of original entry. All transactions which cannot be recorded in any other books of original entry. Have you read that?
Yes, yes.
And then source document, we have like receipts, vouchers. We have receipt, vouchers. We have cancelled checks or dishonored check. Cancelled checked or dishonored checks. cancel checks or dishonored checks. So we are through with now books of original entry. Now we want to look at the question so that we see how we can record this transaction. But do you know the format of this sales day book, purchase day book?
Maybe we brush it.
Yes.
You can just pass by, at least we have a recap of the same.
So like format. So I can write here format of sales day book. So just indicate like date. You go to detail. You indicate a folio or page number, and you indicate amount. That is there.
Okay.
So that is the format. So you will have to capture like date 1, and then the detail, which other account affected, if it is cash, and then the folio page or the page number you can say 01, and then the amount. Then, so the format will remain the same, either the return outward, return inward, and purchase, and so it will be the same with the, let me indicate here. So it is the same with the purchases, purchase day book.
Okay.
Same case with the returns inward and outward, and so just that 3. So it is the same format.
Okay.
But when it comes to cash book, so the cash book format, what do you have the cash book format? So in cash book, we have two types of cash book, right? The first one is 2-column. We have 2-column cash book and
3-column cash book.
3-column cash book. So what is the difference?
2-column cash book?
Yes.
The 2-column cash book is the one that it has the cash and bank.
It has cash and bank.
Well, the 3-column cash book, it has been added a discount allowed and discount received.
Discount received. So you still remember the format? So we can say you start with date, right? And then details or particulars.
We are with the 2-column cash book, right?
Yes, that is one for 2-column cash book.
Yes.
Indicate here 2-column cash book. So after detail, we go to
ledger.
Yes.
The ledger folio.
Yeah, the ledger folio or ledger page, and that now you go to cash, and you go to bank, right?
Yes.
And then you start again with date. So you start again with the same information. I can copy this one and paste it here. The same information. So the same case with 3-column cash book, you only add 3-column cash book, you only add discount here. Let me insert column. So that one we have now like folio, and that we have discount. On a debit side, this is debit and this is credit, right?
Yes.
So on debit side, do we indicate the discount allowed or discount received?
Discount received.
No, it is a discount allowed. It is an expense.
Oh, we have allowed, yes.
Yes, that's why we have to indicate that as a discount allowed. Oh, sorry. And then now we repeat the same information, date, details. We have folio, and we have now discount
Received.
Discount received, since it's an income. And then now we have cash, and we have bank. So that is the format of a 3-column cash book. And then this one is for 2-column cash book. So it is hard in exam to be asked to prepare 2-column cash book or 3-column cash book, because it has a lot of information. It will consume a lot of time. It is good again to have the to know what is it all about, so that in case you don't know what examiner is expecting, so it can decide this semester I will give out the cash book.
Yes.
So now let's now see the question, so that we understand now a bit a concept on a journal entry. And so here I have a question for journal entry saying the following transaction relate to water lead debtors. That's right.
Yes.
Say illustration. Illustration will say the following transactions relate to water lead debtors. For the month of March 2021,
Month of March
2021.
Okay.
For 2021, so we have number one, you say bought goods for shilling 15,000 on credit. Bought goods for shilling 15,000 on credit from Kamua Enterprises. Have you read that?
Yes, sir.
Number two, you say return goods shilling 3,000 to James Enterprise.
Return goods
to for shilling 3,000 to James Enterprise.
For shilling
3,000 to James
3,000.
Enterprise. To
James, sir.
Yes, Enterprise. And there's number three, sold goods to Bashir for shilling 20,000 on credit.
Goes to Bashir.
On shilling. 20,000 on shilling. For shilling, 20,000 on credit. Have you read that?
Yes.
Then the next one is Bashir returned goods for shilling 1,500. And for shilling 1,500.
1,500.
And there is number 5 say bought goods from Baga. Baga. For shilling 3,000. For selling 3,000 and allowed 20% rate discount.
And allowed
20% rate discount. And number 6 say sold good to mkulima for shilling 15,000. For shilling 15,000 and allowed a 10% to mkulima for shilling 15,000.
And allowed
10% discount, rate discount. %10 rate discount. Say required. Record the above transaction in the books of original entry. That is Roman 1. Roman 2. Say post.
Record the above transaction
in the books of original entry.
Transactions in the books.
Original entry. Number 2 say post the entries. Post the entries to the general ledger. Post the entry to the general ledger. Okay, so you have right there.
Yes.
So now we can start the first one. Say bought good on for 15,000 on credit from Kamau Enterprise. Yes. So here we have account which is the purchase day book and Kamau Enterprise as our supplier.
The purchases account.
So we have to open a purchase day book. And so we say we start with date. We go to detail and folio page and amount, right?
Yes.
So let's now so on date, so it is on first. So date you can mention March, and that now here you write first. So the date, the account affected, which is detail, is now we write Kamau Enterprise. No?
Kamau Enterprise, yes.
That is the other party which is affected. affected. And then kwa page folio, you can decide to give 001. 001.
Yeah.
Then, so for Kamau, the amount, tunaweka amount gapi?
15,000.
15,000.
Bought goods of 15,000 on credit from Kamau Enterprise.
From Kamau Enterprise. So we put 15,000. And then the second one?
Returned goods.
To James, eh?
Returned goods for 3,000 to James Enterprise.
To James Enterprise. So tunasema return
Outward.
Return outward. Daybook. So we can still have this the same field. So ilikuwa on when? Second. So we start with March. So let me put so March 2nd. Tumerudishia James, ndio. So we can use this one, even the page folio. That amount is
3,000.
3,000. Yes, that amount is 3,000. So we can copy the same. We paste it down here.
So sales is James Enterprise, yeah?
Yes. Yeah, it is James Enterprise. The detail, the one which affected is.
Okay.
So you can call it this one 1, 2, and 3. So number 3 says what? Sold goods to Bashir, costing 20,000 on credit. On credit. So this one now will be a sales
daybook.
Sales daybook. And so party which affected here is Bashir. It is on third. So amount is 20,000. 20,000. And then the next one is say Bashir returned good of what? 15?
50,000. Bashir returned good for 1,500.
1,500. So we have to raise we have now a sales return for return inward daybook, right? So we have date, detail, folio, and amount. So here, say March, our date it is on.
Our date is
4th.
4th, yes.
So you write 4, and detail is Bashir.
Bashir, yeah.
So let's say 03, and amount is 1,500. And then, so the next one,
bought goods from Baka. Finishing 3,000 and allowed 20% trade discount.
So we will record in which says the which day book.
Purchases.
So we record on purchases and
Baka.
So it will be 5. So account affected here is
Baka.
So we sold good to this Mbaga. So to record amount yangapi.
It is 20% of.
Yes.
Of 3.
So it will be 20%. 20% of 3. of 3,000. 20% of 3,000 ni how much? You can say 0 to
100.
600.
Yes.
No, is it 3,000? Oh yes, it is 600. Should it be 600? Not 600. So now, because we want to record the final value, so it will be 3,000 minus 600, right?
That is 2,400, yes.
That is 2,400. And then the next one is, we record on sales.
Sold goods in Kulima.
Yeah.
Was 15,000 and allowed 10% trade discount.
And allowed, so here, detail is Mkulima. So again, in Mkulima, we will receive 10% of 10,000. Is it 10,000? Yes. 10,000. How much is that? 10% of 10,000. So it will be 10,000 minus 1,000, which is 9,000. The amount we have to record is 9,000 because we have to less that 1,000 discount.
Just a minute. 1,500. Sold goods from Kulima. There's 15,000.
Is it 15,000? Yes, 15,000. Oh, sorry. Yeah, I read 10,000. 15,000.
The 10% of 15,000
is
that is
1,500.
1,500.
Then so 15,000 minus answer. Get
13,500.
13,500. Okay, so now we are done with the posting those transactions in a books of original entry. Then Roman 2 is asking us we post to the general journal. The general journal is specifically the personal account.
Okay.
So we can start with the first one.
So we are opening the personal account, right?
The personal account, yeah. So we can start with the first one now. Let's see. So the first one is the purchases account.
Purchases account.
Purchases account. So we have the balance product tuko nayo. So unaweza andika balance product weke dash. Ndio.
Before we proceed.
Yes.
I thought the personal accounts are for these creditors, like
No. You see, there's a difference between the purchase day book and the purchase account. Yeah. These are the general ledger where you record all the transactions.
Okay.
But day books now is about the specifics. Yes. They normally tell you open the day book and then you transfer that day book to the general ledger. If they say you transfer to the general ledger, you open the specifics account.
Okay.
Yes. So like the first one is purchase account. With so the first purchase we purchase so it will be The account affected here, it will be a Kamau Enterprise.
Yes.
Tukabai ngapi? 15,000. And then tukanunua tena from Baga. Ngapi? 24. Una copy paste tu kwa huko, then tunaandika balance.
Okay.
Balance carried out itakuwa ngapi?
This is 15,000. 17,400.
17,400. Okay, then we go to the
so
next
maybe
one.
something to note is that for purchases account,
yes,
we take the discount allowed figure, right?
Yes, you take the discount allowed figure. You don't take the original value.
Okay.
That's why the next account we are opening here is discount allowed. Discount allowed. So we have to open a discount allowed account. Discount allowed. So here we have debit and we have credit. So like a discount allowed account affected here is purchases.
Okay.
Is purchases.
Oh, okay.
You can say purchases or Mbaga. You see, when you say the purchase account, it's the same with a creditor's account, which if you open the personal account, itakuwa Mbaga.
Okay.
Yes. So a discount of how much? Ilikuwa 24.
400.
Ilikuwa 600, ndio? Yes. 3,000 minus 2,400. 3,000 minus 2,400. So you have the original price was 23,000, and then to have given out, they have given us this one should be discount received. Sorry, we are purchasing from the suppliers and they gave us a discount. Yes.
Oh yeah.
So it should be discount received, not discount allowed.
Okay.
That's why here we debit that. So here we will credit. All income should have a credit balance. So here you write purchase in bracket Mbaka. So Baga ametupia discount ya 600, right?
Yeah.
Okay. And then so we go to the next one. Let me call it this one A, this one B, and C. So the C says what? The next transaction.
Return goods.
No, is it the return or we purchase first?
The first transaction we said we bought goods
and then the next one is return goods to
goods for 3,000 to James Enterprise.
James Enterprise.
Sales account.
So we must have the sales account and returned outwards.
And returns outward account.
Is it outward or inward?
This is returned goods, so it returns outwards.
Is it you returning or the customer returning?
Returned goods for James Enterprise returned goods to the customer.
It's a, let's read. Say, returned goods to James Enterprise. And we know James alikuwa nani? Si James alikuwa returns goods to James. Yes, so it is a return.
Oh.
So meanwhile, it is not we are not opening the sales account. This is so we purchase from the James. Yeah, so account affected is the purchases account, right? So we credit the purchase account return. So we credit here James, that is the return.
So
return outward.
So we go back to where we had actually opened
the purchase account.
Then we credit.
Yeah, so you don't need to open the new account. Don't you credit that amount? Is it 3,000?
Yes.
And that's now you debit the return outward. We debit the return outward.
So the sales account, we leave it first, yeah?
Because we have not find a transaction related to the sales account. So the first two transactions in a relate in a purchase account. Yes. No, so you go to the next transaction, Asama.
Before, so we debit the returns outward account. Yeah?
Yes, we debit the return outward. You may debit time and finally.
Hapa kwako
pass.
Hata hujajaza.
Baada. So hapa nitaweka purchase. Ngapi?
Yeah, 3,000.
3,000.
This is return. Oh yeah, 3,000. Sure.
Yes, it's return outward. And then the next one.
Next one is so James. Are we opening account for James?
No. Say James what?
Enterprise.
James Enterprise.
I was kindly asked if we are opening account for James.
Let me see that transaction. Say. See, we don't open the transaction for James. So we say returns goods to that to James Enterprise. So James Enterprise are our suppliers, right?
Yes.
That's why we have recognized that James here the return. That is the account. You see here we don't open the individual's account.
Okay.
So we have opened James, that is the return outward. So we have the account affected here to be the purchase account, which is in case the James ako hapo, si ndio? Juu hatukuambiwa James alikuwa amepurchase ngapi hapa. So kama tungejua James alikuwa amepurchase ngapi, ingekuwa James angekuwa on a debit side, right?
Okay.
But we have not been told that the James purchased this. So we assume that the James is on debit side, but we have not been given the figures. So now we are reducing his value by crediting that amount of 3,000.
Okay.
Umeipata hiyo concept? Alafu una open sasa return outward. Una debit that amount. And then the next one atuambia Bashir returned good what? 1,500, right?
No, we have sold sold goods to Bashir
on credit. Yes.
20,
so we have 20,000. So kama hiyo unaona kama hiyo ametuambia tuliuza and then tukareturn. So that one is good, but for James hakusema.
Oh, here James will just return.
Yeah, so unaona, but for Bashir unaona tumeuzia Bashir and then the next one ni Bashir amereturn. Yes. So here account affected now tunaenda kwa sales account, right?
Yes.
So we can say Bashir
on the credit side. Yeah.
Yes, on credit side. Say Bashir, unaweza sema Bashir or cash. Ya ngapi?
Yeah, 20,000.
20,000. And then on the second note, Bashir return hizo goods, ndio? So you say returns inward. So you credit early return. So una credit ya ngapi?
1,500.
1,500. I hope when I take hizo note, then to try balance up.
And 1,500. So we have to open a return
inward account.
That is different from the returns inward day book, right?
Yes, it is different.
Okay. We credit, huh? We debit your 1,500 on the sales.
Let me draw this first.
Okay.
Should we do the right thing on sales? It seems that sales we do the opposite. So we should sales is an income, sindio?
Yes.
So tungefanya nini? Tunge credit. Yes. Okay, credit Bashir 20,000. And then we debit the return inward.
Oh, so we have to change this, huh?
Yes, so you have to change because it's an income. So I know income should have a debit balance. So since we debit in sales account, we should credit in a sales, in a return?
Inward.
Return inward. So this is now where the double entry or a duality concept apply. So here now we say sales account, copy 1,500. Debit, credit. Are you getting it? Because this is now where the basic accounting start. Once ukimiss hapo, utaielewa accounting mpaka mwisho. Yeah, because that is the basic accounting. In fact, that's what's all about accounting. Where to credit, where to debit, where to credit, where to debit.
I think we'll have to do a lot of questions and practices on that so that we can actually grab the whole concept.
Yes. The next one is?
The last one, bought goods from Baka, 3,000 finishing and allowed 20% trade this.
So to may purchase. So kwa purchase account tunaweka that amount. Mbaka. So tunaweka. Tulikuwa tumeshaweka Mbaka
kwa purchases.
Yeah.
Huwa tumeweka 24.
Oh, tumesha credit hiyo. Na so bado ya sales Si ya Mbaka ya Mbaka tumeshamalizana nayo.
Debit for purchases.
Tumedebit hiyo purchase ya Mbaka.
So the other account that has been affected ni discount.
Discount received. Tumeshafungua discount received.
Yeah, so they're saying and allowed 20% trade discount.
So that one is now discount received.
Okay.
Yeah.
Okay, so discount received.
See, we have opened the discount received. Yeah, ilikuwa B. Tukaidebit hiyo 6,000. That is Mbaga.
Did we open this account?
Yes, there is a discount. Here it is for discount received.
Oh, sure, yes.
Yeah.
So actually credited Mbalka 600, eh?
600, yes.
Are we through with that then?
Yes?
We are through with that part? Or...
Yeah, we are no, there is the last one for sales.
No, I was talking for number 5.
Yes,
Have we
number
actually
5.
dealt?
Yes, because we have already, so you have debit the, yes?
So we have posted for sales, not really sales, but for discount received, we have credited 600 purchases from Mbaka.
Mbaga.
Then for the purchases, we have debited Mbaka 2,400.
2,400. So meanwhile, there is a discount received here. Of how much? 600. So that we do with that transaction. And then the next one is sales. So we have a discount. Tumeuzia mkulima ngapi?
Bashir sold.
Tumeuzia mkulima 1,500, sio?
Bashir returned goods for 1,500, yes.
No, see, we have done to that with the returns for Bashir. Sorry for that. We have done for Bashir.
Yes, we are done.
Si tulimalizana na return ya Bashir, tulimalizana na return 1,500.
We have credited sales.
Yes, to debit sales account.
Yes.
So the next one is the last one, number 6. Nasema nini?
Number 6 is sold goods to mkulima. What is it?
So mkulima tunauzia mkulima. So hiyo ni income kwa sales account, tuna credit. So unaandika mkulima, sio? Na credit ngapi?
13,500.
13,500. And then the same case kwa hii mkulima tuko na discount.
Discount received.
Not discount received. Tumempea. Unajua this is a customer discount allowed. Si tumempea customer discount. So this discount is a discount allowed ya ngapi? 1,500.
500.
1,500. 15,000. 1,500.
1,500.
It is 1,500. Then we open a discount allowed account, which is an expense account.
Discounts allowed.
Discount allowed is an expense account. So you debit all expenses should be there. An increase in expense you should debit. So here tutaandika sales account, which is in bracket mkulima. How much? 1,500. Yes. Then now you can do summation to get the balance carried down for each account. So do you have any questions before we move?
Let me. Okay. I think we can continue.
Okay. So the next one, let's look at petty cash.
Petty cash.
Yes. So I want to write these questions. Yes.
What we debit? An increase in expense.
Yes, an increase in expense we debit.
We debit.
Yes, we debit. Any increase in expense we debit. Any decrease in expense we credit.
So an increase in expense we debit, right?
Yes.
Okay. We go for.
There's also another one. Increase in asset you debit. Hello? Hello? You hearing me?
Yes, yes. You are talking about an increase in assets.
You debit. Increase in asset you debit. Yes.
And then an increase in expense we also debit.
You also debit. And then increase in liability you credit. Increase in liability you credit, and so that's all. An increase in capital again you credit. Okay, so now because we remain only with 24 minutes, I want you to just write this question quickly, then we do that one. This is for petty cash. Say petty cash illustration.
Okay.
Mbona hata mambo yamegeuka siku hizi? Usipokilia bado ngapi? Sikuwa na 50 yangu basi.
Nitakupatia.
Shi. Kwa hiyo 85 milioni nimekilia katika. Angalia.
Okay.
256. Bado 6 vipi? Hey.
Fanya hivi.
Hapana.
Angalia hapo.
Kwa hiyo balance yangu.
Ngapi?
Chukua tu 30. Hiyo 50 itakuwa imekava. Nitamkuza Mungu. Ndio. Najua lazima hapo kuna mtu atauliza pesa kama imefika. Ndio maana nimeleta. Zangu nyingi sasa. Nipe hiyo 100 ninayo.
Inshallah. Haina shida.
Are you done with the question?
Yes, sir.
Are you done copying the question?
No, I'm still copying.
Oh. The time is coming.
Yes. Also the there is no number 3. I'm seeing 1, 2, 4.
Yes, there is no. It's just based on date 1, 2, 4, 5, 9, 11, 23, 26.
Number 5. Bringing down the
Yes.
last part, bringing down the
last part. They want to
cash.
receive cash for personal telephone call.
No,
Yes.
the required part.
The required part say enter the above transaction in the petty cash book and balance the petty cash at 30th April, bringing down the owned 1st May, or the balance for the 1st May. Basically, the balance carry forward. They are asking the balance carry forward.
Or bringing down the on first.
Yes.
I'm trying to link up the English between on and.
You can say bringing down on 1st May but balances.
First
May balance. So if you are true now, we can open the petty cash ledger. So I want to leave this one. No borders. Let's put this one border. Okay, so basically we started with the cash book, the format of petty cash. Inaanza na receipts, then inakuja dates, inakuja particulars. Oh, are you seeing that screen?
Yes. Date. We started with the receipts.
Okay. Started with the receipt date and particulars.
Receipts, dates, particulars.
Start with date. Date, particulars, and then so here we write the total amount. Later. And here now is where you opened the other accounts, right?
Yes.
Are you getting me? Yes?
Yes, I'm getting you.
So now we go back to our question saying there is a petty cash balance in the beginning of the 1st April of what? 130? 113.
Yeah.
So that is our, I don't know why was it not. Let me delete this sheet. So that is the first. So date here you will write first, and we have, so you start the amount on there, you put the amount on the receipt side, that is 130, 113.
Okay.
And in particulars, you write balance pro down. So we don't integrate the amount. And then you go to the next transaction. The next transaction treats what?
Next transaction here is
Same. A petty cashier. Petty
Okay.
cashier presented a forger to cashier and obtained cash to restore the imprest. So that is the cash imprest. The main cashier amekupea the imprest so that you restore back your original value, right? So you will write under date, you write 2, and particulars, other account affected is cash. And so again, because this is an imprest, we have to integrate on another side of the receipt. How much?
2387.
2357. 87. 2387. The next transaction?
So we are also putting it on the receipt side, eh?
On the receipt side, because it's an imprest. We are not expensing, we are receiving.
Okay. Yes.
The next one is?
Bought postage stamps 850.
They bought a postage stamp 850. Now we are purchasing. So you write date. This one was date what? 4.
Right.
Date 4. We put a stamp. So you can write postage.
On the particulars.
Yes, on the particulars. And now we put the amount there. We don't put on the receipt side. It's we are expensing now. How much?
Money out, eh?
Yes.
That is 850.
850. Then we have to open now a new account for postage and stationery. We post against that 850. So you open a postage up there. Postage and stationery. And then you post the same amount again of what? 850. So here we write petty cash. So the next transaction is?
The next transaction is paid to courtesy of Bishop of Credit.
Paid a courtesy bishop or a credit of what? 2?
35.
Of that 5. So we have paid a bishop now. So yeah, which date is this? A 5? 5. So here you say courtesy bishop. Then, so amount 235, right? So you have to open this one. We will post in a ledger account or a general ledger, because we say a general ledger, we post a transaction which are not being recorded anywhere in the books of original entry. That's why we have to record a ledger account here. We create a ledger account and we post that amount of 235, right? And then the next one is.
Should we not give it a name of like courtesy bishop or?
So we don't. You don't open a box called courtesy bishop, right? But you indicate that it is for bishop, but the account you will open, it is for ledger, and that now the narration you will be writing in that ledger is that you paid for bishop.
Okay.
Yes. Okay, open when you are opening the journal entry, you will write a narration that you pay this amount to bishop.
Okay.
And then the next one is paid a bus fare. It is on when? 9. So 9, we pay a bus fare. How much?
172.
172. So we will have to open traveling expenses. We post this value. So up there you have to open traveling expense. Of 172. And then the next one is report a envelope, right? Tumenunua envelope date 11. So here you write envelope. How much?
70.
Yes, 70. So envelope is something you use in an office. So we will classify it under postage and stationery of say 70. So we have classified under postage and stationery. Then the next one.
You won't open another account.
It is under postage. You see in petty cash, you see utakuwa unaangalia the main account like postage and stationery, the ledger, traveling, office expenses. Those the main account you have to open. So you don't necessarily open the individual's account like envelopes account. Yes. So you pick the general names or the main expenses account so that you classify. Kama ingekuwa toothpicks, if it was a toothpick, so you open in narration you say toothpicks, but the main account, expense account, is a stationery.
Right. Then we'll still cash personal telephone call.
Okay. So can you explain that? So how do you understand that one? If it was you, ungewekaje?
This is we receive. So
yes.
It's on each side.
Yes.
We'll put 68. And then for the date, we shall record 23rd.
So,
particulars, telephone call.
So particulars is telephone.
Then it will fall on the postage and stationery. Yeah.
So that's where you will fail automatically. Zero mark. So this is you see a petty cash. Maybe in a petty cash, these guys they maintain a petty cash and then they have been given the cash to reimburse the airtime. So they have been given the airtime amount. So maybe now the airtime amount was below the required. So the main cashier now anampea pesa reimburse hizo balance. So ni pesa una receive. So you have to record una receipt side of what 68. Yes. And then now you can comfortably balance your account. So yes.
When we post so we don't have to put it elsewhere. We just have to record on the receipt side.
Yes, you don't need to open any other account. It is on our receipt side. Oh, there's a one. We are leave this. They put a petrol, right? So 26. put a petrol of how much? 10.
10.
Petrol tunaweka under which category? Is it stationary or traveling expense?
Transport, traveling expense.
So you put under traveling expense. That's now, so this one we can balance, say some of this one.
On the respective account, on the respective column.
Yes, so you sum on the respective column. I can track this one and sum the balance. Even I can sum again this one. I sum this one from Kansapaju. After that point, I sum and get the total of what? 13. 1337. And you see, we have been asked, you balance off and get the balancing figure for the first May, right? So the amount here, the total amount we have spent should be equal to the total to the receipt we have been given, right?
And let me try to add them.
Just add
37, 9, 20, 35, 17. 172 plus 10 on the traveling expense.
Yes, 172 plus 10. 172 plus 70 plus 10.
No, on the traveling expense column, 172 and
plus 10, or should come to 182, right?
Yes.
182, thank you. I think everything else is okay.
Yeah.
So now you can sum again. So sum for me the receipt side. How much?
$25.68.
25.68, right?
Yes.
So that is the total amount. Alikuwa amepea huyu cashier. Alikuwa amepea ngapi? 25.68. But huyu cashier akaspend ngapi?
Spend 13.37.
Yes, so kumaanisha kuna balance yenye atakuwa nazo at the beginning of the period. Which is balance carried forward here. How much? So itakuwa 25.68 minus 13. That's 7.
That is 12.31.
Is it 12.31 or 13? 13.67. 13.37.
Okay. 25.68 less 13.37.
13.67. Chakuja ngapi?
12.31.
12.31. So ukifungua the next hii ilikuwa ya this ilikuwa ya April, right?
Yes.
So ukifungua hapa chini ya May, the balance product itakuwa ngapi? 13 12.31
as opening balance for that particular
period. So here we will sum the total should be 25.68. The same case this side 25.68, and that's now how we prepare the cash book. Petty cash, I mean.
Petty cash, yeah.
Yes. So that's how we prepare the petty cash.
Wow.
You see now as we continue the workload now. As you clean now, the workload now started becoming more and more.
Okay.
That's why FA is a very interesting topic. Unit, you will find that the time is over. Hata ujasikia umechoka. Unlike the theory paper. So let's.
Grabbing the.
Yes.
Once you grab Once you grab the concept, you'll find it is easy. You can
It is easy. Yes. But now when you don't have that concept, you will struggle. Like if it is not, let's say note 23, you don't know how to deal with that note 23. You will stay there for 10 minutes. Because you don't know that concept. Okay, so we finish the meeting then. So we said tomorrow we don't have a class, right?
Yes.
Up to the next week.
That is up to Monday.
Monday, Tuesday, and Wednesday.
Yes.
So if we go with this speech, I hope we will finish.
I want to believe so. I want to believe that we shall finish.
Yes, we shall finish. So, but now, so what I request you,
Okay.
like the one we have did the concept. So try to go and find some exercise or the question in the past paper. Try to attempt. So if you find difficult, you just tell me I'm doing this sitting and this sitting, and I have held up in this point.
Okay.
Yes, so that we don't assume that you have understand and you are not understanding.
Yeah. I will try to check on my side, but if you could be having some,
Yes.
I can actually share to my WhatsApp so that we can.
Yes, but in our past paper, we have not reached. There's no a lot of question for computation for topic 1 and topic 2. It is only theory. So up from topic 3 now is now where you will find them in the past papers.
Okay.
Yes. So thank you for your attention. Let me
I
finish
appreciate
this meeting.